Okay, it's preparing the live stream. All right. Looks like we are live. Okay, it's preparing the live stream. Oh, we've got a delay. All right. So let's go ahead and start. Looks like we are live. Okay, it's preparing the live stream. Oh, we've got a delay. Patrice, you're the technical person here. So let's go ahead and start. Looks like we are live. Okay, it's preparing the live stream.
So you guys are getting feedback. How about for me?
Yeah, we're getting feedback. If I turn down my
microphone,
my speakers. You're the technical
person. I wonder if it's coming through on the other end like that.
You can hear both, right?
Looks like we are live. Okay, it's preparing the live stream.
So you guys are getting feedback. How about for me?
Yeah, we're getting feedback. If I turn down my all right, I'm going to turn it down, and then my speakers. You're the technical person.
I wonder if it's coming through on the other end.
All right, so let's go ahead and talk. This is, like I said, this is our first rodeo. And for those that are just joining us, I'm Andy.
And I'm Patrice.
And we have two different contributors here as part of our team. And Melissa Wiltrout, you can see she's wearing the same hat as I am. She is our back operations manager. She handles all things Andy Daniel Group. So when you are doing a deal with the Andy Daniel Group, you'll be dealing with Melissa quite a bit. So we wanted to introduce her and show everybody what Melissa's all about and kind of what's going on the back end. And then we also have a special treat because we have our preferred lender, Chris Madrid, with Guaranteed Rate. He is been my preferred lender. We've been working closely from my second deal on in the business. So a wealth of knowledge, one of the top loan officers in the nation. And so it's great to have you guys on our team. So Chris, let's get started with you, if you don't mind, on a kind of a broad spectrum, kind of a 30,000 foot view. What's going on with interest rates? I know interest rates have been crazy.
Yeah,
we've seen a lot of spikes in the market. There's been a lot of confusion with the Fed's cutting interest rates down to zero and what that meant for the market as far as that is concerned. And then what is this coronavirus? What kind of impact is that having on the market? What are you seeing out there?
Yeah, man, absolutely. So I think one of the most important things, and obviously the reason I love we're doing this is, or the fact that we're doing this is because a lot of times the information that you see, either online or in the news is delayed, right? So I remember 2 weeks ago, interest rates had dropped significantly, but everything that we were seeing in online or in the news really hadn't started talking about it, right? So it was us as loan officers, as originators, reaching out to past clients saying, hey, it's a great time to refinance or purchase. Rates are really, really low. Well, what that ended up causing was an influx in the market. So in numbers that we were looking at, there was or still is currently about $7 trillion in loan volume that had a potential of refinancing, right? So if we do some quick, 7 trillion is a lot, but if we do some quick math, and say we're most loans have a loan average or a loan amount average of, let's just say even 300,000. I mean, that's 23 billion. Is that right? 23 billion people, or 23 million, depending on the numbers, that needed to refinance, right? So if you have that many people or loan amount average coming into the market at the same time, it's going to basically bottleneck at some point, and that's exactly what happened. So 2 weeks ago, interest rates were really, really low. A ton of people came in to refinance, right? Because there was a legitimate benefit, whether to pay off debt, shorten the term, something like that, there was a legitimate benefit to refinance for, for the customer, but then it kind of bottlenecked. And then not only that, we ran into an issue where, from an investor standpoint, the investors basically had all that they wanted on their balance sheets, so they started kind of pushing back and saying, "Hey, we're good. We're not going to take any more of loans when they're kind of bought and sold on the secondary market or turned into a mortgage security." So then, literally overnight, like a week and a half ago, interest rates went from the low threes to low to mid fours, like overnight, right? So when that happened, then you started to see, hey, interest rates are at all-time lows. Call your loan officer, call, everybody to see what's out there and available to refinance. So that's I think a lot of the issue, and especially if you're not kind of doing these live things that are, hey, today is March 25th, and we're talking about this. This is what's happening today. It's that a lot of information gets delayed, right? Or you're seeing it a week late, which is exactly what happened. So, fast forward to Monday, when of course we got the news of obviously the federal government, talking about a stimulus and what that was going to do, and that helped solve some of the liquidity issues that we were seeing a week and a half ago when interest rates spiked up, right? So as of this week, we've seen interest rates drop back down overnight to that, to low threes. Federal government, obviously, a lot of people are looking at the stimulus, but where we're at today, right? As of today, interest rates are still really low. You need to refinance if you need to consolidate some debt, invest, anything like that. It would be a great time. A week ago, a week and a half ago, not so much. But as of today, we're still seeing very, very favorable interest rates. Still really low.
Okay. So one of the things that we are experiencing here, we've got, obviously we're all in shutdown mode, right? So just to give everybody, we deal with, not only as a team, we have a bunch of local business, obviously, but we also deal with a lot of people that are relocating and aren't as familiar with what's going on with the market and what's going on from a shutdown perspective. Right now in Dallas County, it's complete no-show. People in Dallas are completely locked down. Tarrant is the same, right? And Denton is pretty much the same, but Collin County is kind of open for business, right? Which in Frisco, which is where a lot of people are moving into, is split between Collin County and Denton County. So kind of got a mixed bag or some different
Opinions.
Some different just confusion around whether or not we can even go sell properties or not. So I think what's happening with a lot of this data that is out, you are seeing, the sales cycle in real estate is anywhere between 30 and 60 days. And so we're still seeing lots of activity as far as solds are concerned, right? There's still people buying and selling real estate. It's just how we do it is changed a little bit going forward. And we're going to keep a close eye on the markets and see those accounts that closed yesterday, right, were back and put under contract before this whole thing kind of took place. I know that we're seeing a lot of people back out of contracts. And I don't know if Melissa, what have you been seeing? Have you experienced that at all?
Yeah, I've experienced it from a client perspective, and I've experienced it personally. So personally, I was in the process of buying a vacation home, and we went under contract before all this came about. And I have been trying to, just basically stick with it and not buy into or be a part of the panic in the market and pull out. And I say that because whether you sit tight or whether you move forward is different for each individual. And what happened to us was we finally got some corporate news where we heard that there were across the board salary reductions. And so that sort of forced us into a different mode to pause for a moment and stop that transaction. So as much as I didn't want to, and as much as I love that, right now, financially, we need to be a little bit intelligent for ourselves. And it's just a postponement for us. So we'll probably, when we ride this wave and get through it in a few months, we'll be, that statistic out looking again, which stinks, right? Because now I'm going to be part of this big group and this bigger demand. But we had to do what was right for us right now.
Okay. So one of the things, and like I said, we're seeing that all across the board, right?
Mm-hmm.
We have clients that are losing jobs, that are just they for one reason they can't continue with that contract. We've had several of those instances. We've had people that, like I said, wanted to hit that pause button because of uncertainty. They're still active buyers. They're still wanting to get into the market in a bad way, but they, like everybody else, are just concerned with what's going on and safety first and all that good stuff. One of the things that I think we're going to experience is, the one caveat is that this is such a prime time of the year, right? This is when you've got a ton of activity, historically speaking, spring and early summer, and we're hitting the pause button essentially at the peak of the season. And all of these buyers are all going to converge on the market all at once. And I think you're going to see a spike up in the market. And we're already in a low inventory situation here to begin with. If you've seen our other video, if you're new to the channel, go through and browse through, you'll see recession. There was a stat that came out right before all this happened that they were looking at recession-proof cities and comparing. There was talk already of an anticipated recession here in the next year or two. We've been in a bull run for a better part of a decade. And then what cities did well compared to the last great, what do they call it? The Great Depression. Great Depression there back in 2008 and all that good stuff. And what was that?
The Great Recession.
Better part of it.
Recession, not depression. That was back in 1920 or
Yes.
So anyway,
that's why we're a team.
But 3 out of the top 4, or 3 out of the top 5, right? 3 out of the top 5 recession-proof cities were right here in North Dallas, right? In our playground, in our sandbox. Frisco, number 1. You had Plano, number 3, and you had Denton at number 5, or number 4, and then Austin was number 5.
Yeah.
So in Texas, we're kind of in this little bubble, it seems, because you've got all these corporations, all this supply and demand, and all that good stuff. So I think once the light switch gets back on and everybody is able to go show property and do all that stuff, it's just going to create a even a more frenzy, and you're going to see that spike up with multiple offer situations and all that stuff. Now, Chris, when we were talking offline, I know that you were talking about how you think that the traditional selling season is going to be extended to some degree because of this coronavirus and what's going on right now. Can you talk a little bit about that?
Yeah. So, obviously in conversations in the past, we've always talked about how, typically after the end of the year, starting, the start of the new year, you're typically from January to February kind of in this upward swing, right, of kind of momentum in the market. And then of course spring hits, right, and you're kind of on that upward peak. And then it kind of comes down, right, May time frame, and then June it starts to kind of take that upward, that upward swing. And then of course July, and it goes back to that, spring, summer buying season. And it's cyclical, right? This happens every single year. It doesn't always happen on the exact same day or month, but it happens every single year. So right now, where there's not going to be a lot of activity, there's a lot of uncertainty and volatility in the market, and quite frankly, some people may not want to get out and look at houses while there's a potential of catching the virus, or if somebody's sick, obviously they don't want to pass that on, right? And then the flip part to that is sellers, right? So if they are in the process of selling their home, they may not want anybody coming in, right? So they can do virtual. They can do virtual walkthroughs. I know are they've gotten whole lot more popular in the last handful of days and week, and maybe maybe kind of the way of the future. We don't know, right? This is all uncharted territory, I think.
Which is funny for Patrice and I, because we do home tours all the time with our channel, right? So that's the funny part. So
and have been doing quite a few for our buyers that are wanting to
out of state or for sure.
We'll send it to them, and so we do it all the time.
Yeah, and in fact, that's a great point, Patrice. So that one of the things that we do for people that are out of state, and we'll be doing it for people locally as well, once we get the okay that we could be out there without getting fined, is taking our camera through, kind of showing you exactly how we normally would do a video tour, and we tour the whole area, the neighborhood, and then we kind of customize it for, we're having a conversation with you. This isn't a public, one of the public videos that we do. This is more of a service that we provide for our clients. Yeah. So we'll be saying,
because it starts kind of when you walk in, when we drive into the neighborhood and kind of all around, so they can kind of get a feel for it. Because it's hard when they're not.
This is for a lot of we have a ton of buyers from out of state that have been here. We've gone through tours. We just weren't able to maybe find that dream home.
They had to go back
in the day or two that they were here, and then but they have a good grasp of the area, and then we just want to kind of specifically show them what's up. So go ahead. I kind of interrupted you, I think.
No, where was I? Where did we leave off? No. So yeah, going back to again the kind of the cyclicalness of the market, instead of what we typically expect for a spring, hot spring, early summer buying season, that made us get pushed back, right? So we end up, if we're talking 60 days, right, is kind of what everybody's talking about. I know the president had made a comment the last couple of days of wanting everything to be back open by Easter, and then I think that got pushed back to the end of April, maybe early May. So if that happens, and then we start to, it's not going to be, obviously it's not going to be overnight, right? Restaurants it'll take a while for them to bounce back. Obviously housing is going to take a small hit, right? If people aren't wanting to have their homes showed, aren't wanting to get out to see homes, housing will take a relatively small hit. But I think the reality from a housing perspective is it's not, we're not in some kind of artificially inflated bubble, right? I mean, this is a legitimate housing boom, and it has been for a while, and will continue to be as long as there's jobs and a strong economy here in North Texas, right? Which is what we talk about all the time.
With the PGA coming in and all those other big.
Oh gosh, yeah. And they're not even here yet, right? A lot of those places that we talk about haven't even opened the doors yet. So there's still a lot of potential. But yeah, I mean, we may see.
Right here, they're working. They're still out there working.
Oh yeah, no, yeah. I mean, construction is an essential, right? I mean, those are construction, healthcare workers. We talked about that. Obviously, police officers and paramedics, and all those are essentials. So they're not. They're still showing up to work every day. So from that perspective, I mean, yes, there's still going to be people out there that need to purchase. It's just going to end up pushing the buying season back a little bit, right? Where before, if it started in March through the back half of July, well, if everything shut down until May, it may be May through the back half of October, and possibly pushing into November, where we won't see that traditional kind of dive down after after like Halloween through the holidays, right? I mean, that's typically when we can all somewhat take a little bit of a breath. It always seems to pick up right towards the end of the year, right? Customers that don't want to be in the home before Christmas and whatnot, and then it kind of just falls back down after the New Year. So that may not happen, right? Which I think for most, you plan accordingly. Vacations, if you're used to doing a summer vacation, that may or may not happen, right? It just all depends on how you want to schedule and work your business and whatnot. But there's still the potential, right? There's a lot of customers that need help. A lot of questions to be answered right now. I'm always so leery of just the bad information that we see it every single day. I think we've talked about it. Prior to the call, is just all the bad information that's out there. So these things like this are super important to know what's kind of boots on the ground, what's happening now. Something that I want to get into here in just a second is the impacts or the potential impacts that obviously we need to discuss of what it takes to get qualified, right, to purchase or refinance a home, and then how that's going to be impacted through this process. So we'll cover that in a second.
Okay. Now we do have a question, Patrice. You're monitoring the.
Oh yeah, we had a question. It's asking what the Southern California market will do, if we have any thoughts on that. And what are your thoughts on that?
Okay, first I want to just disclose that I'm not licensed in California
Yes.
yet. We are working on that, so be on the lookout for that. With that said, we are from Southern California, so obviously we do have an idea, and I know a ton of agents out there,
And family, and yeah,
and family, and everything else.
Mm-hmm.
In my experience, things in the past, going off of past experience, is not indicative of future results. However,
a little asterisk there.
yeah. However, I think the coast, the coast can be affected quite a bit. I think because you have that high volatility of appreciation, it's a little more of a volatile market out in Southern California. But like Chris was saying, I think we were on a national perspective. We were on such a bull run, and the stock market was at all-time highs just a month ago. And we're coming off of all-time highs and that sort of thing. If this can be, if we have a quick correction, a quick recovery with this, and the economy and the jobs are not completely lost as much as some of the people are claiming out there, I don't think it will have a huge impact. Like I said, at least I hope not. The Southern California market is a different thing. I wonder what part of Southern California they're from. But and then where they are exactly. That is, we'll have a hard tell. But yeah, I think it's one of those things that we will need to have a conversation maybe offline and kind of help and walk you through and kind of show you the different steps. So if you haven't already, I don't know who it was that asked the question, but if you haven't already, we will link a dream home form. It's all in our videos, or send us an email at info@andyandpatrice.com. And we can kind of set up and have a private conversations and kind of gear you towards what we're seeing out there and that sort of thing.
And we're planning on doing these videos once a week. And so as we get information, we'll fill in everybody, with the information we get also.
But it's a good question. It's one of those things that we have such a pipeline, because we work with so many people from Southern California that they're nervous on what's going on. Locally. I mean,
our own families are. So,
and we saw the market in 2006 through 2010. That really took a hit out there. We were lucky out here, but back in Florida, California, New Jersey, those Arizona, Nevada, those guys really took a hit. So, a good question. And like I said, if you guys have any other questions, feel free to tap it on and ask away. And then Melissa, what are you seeing from our agents? What are you hearing as far as what they are experiencing?
So it's a little bit different in different parts of the country, but for the most part, and what I said earlier about, it's a very individualized thing. I had a client who is in luxury commission car sales, and he was contracted and he started getting nervous, and we opted to get out of that contract because of the uncertainty with his income. And that was just the right decision for him. Whereas if, we have other clients who are with very established big chip companies that they know are, got the cash flow going, and they're ultimately going to be okay. They're still looking to make those moves. one of the things I think that we're doing as a team right now and how we are different from in the real estate industry, what we're doing right now is like normal. We do this on a daily basis. We're very good with technology. We are virtual based. And so our agents are spending, as well as myself, we're spending a lot of time reaching out and just talking to people and making sure their families are okay, making sure their communities are okay, seeing if there's anything that we can do to help people that might need help, answering questions. You know, we have a little bit more time to do that now. Yeah. And just building relationships. So we are here for everybody, and that's what they're focused on. People are still interested, and they still have questions, and they're still looking. So we get them on drips, and we show them what's available, and we just are building these relationships and being knowledge centers for folks.
And I think that's really all we can do at this point, right? There's such uncertainty. I think there's we're all pinned up in our houses right now and all that good stuff. And we've got the desire and the demand. We want to move, we want to buy, we want to sell and all that good stuff. But it's just, we can't right now. For the most part. I mean, there are some instances where, you know, we are seeing some movement, but for the most part, we can't. Right. Just to kind of go over some market data. And I want to focus in on kind of new listings for a bit, because this is kind of shocking to me, and I think it will be kind of shocking to others. I know that you know that we, the kind of holds that we've been put on Collin County, Dallas, that is relatively new. That's within the last 2 days, right? It's pretty fluid, but new listings for the last 7 days in Dallas County, we had 400 new listings. Now, how does that compare to this week last year? Well, last year, do I have that data? Oh no, I don't have that data on new listings, but I do have it on solds. So solds, to give you an idea, in this last week, we had 447 solds in Dallas County. In this week last year, we had 557. So that's where I don't think you're going to see a big difference. We'll start seeing that in the next week or two as people like Melissa and Melissa's clients, and we've had several clients as well that have kind of hit the pause button. We're going to start seeing those numbers, those solds go down. Because like I said, that sales cycle is at least usually a minimum of 30 days. Did we have other questions? Or
no, she just said she lived in the
Inland Empire.
So
know it well, right?
Yeah.
So yeah, so that the Inland Empire, I think as far as the market is concerned, I would be concerned. I would keep an eye on that unemployment number, because I think if out of Southern California, part of the places that will get hit is that Inland Empire area. At least it did. There's also a flight there too. So because you have a little more affordable housing compared to Orange County and whatnot. But get a hold of us. Love to talk to you offline about that, and then kind of walk you through what we're seeing and kind of get a plan of action.
And we're keeping an eye on it for sure.
Yeah, we're definitely keeping an eye on it. So, so anyway, what are some other things real quick? And then if we don't have any other questions, we'll hop off here shortly.
Yeah, no, I mean, one of the things I wanted to touch on related to if you're currently in either the home buying process, right, or refinancing, communication obviously is always the best, you know, the best thing to have. And from an industry perspective, you know, I think as loan officers, as originators, that's we need to be on top of you know, obviously what's going on within the industry and communicating that, you know, effectively and efficiently. Now, one of the things that we're seeing right now is a lot of non-QM lenders that are basically just pumping the brakes on any type of production.
All right, what's QM?
What is that? Yeah, so
talking
QM, yeah, for sure. So let's kind of unpack that. QM, or a qualified mortgage, is what Fannie Mae, Freddie Mac, Ginnie Mae for FHA and VA loans deem as traditional financing, right? So if you're doing a conventional loan, you're typically putting anywhere from 3% up, right, to from a down payment perspective, And that on the secondary market would end up getting sold to either Fannie Mae or Freddie Mac. They set the guidelines for conforming conventional loans, right? And then you also have FHA loans, VA loans, USDA loans. Those fall under Ginnie, which are classified as government-backed type loans, right? So they're backed by some kind of a government agency. So those end up getting sold to Ginnie on the secondary market. Now there are other types of loans, right? So if you don't fit into that box of what we call traditional financing and what the government deemed as qualified mortgages, and basically where lenders can lend money, and as long as they've kind of dotted the I's and crossed the T's from a verification perspective and confirm the customer's ability to repay the loan, you fall into that qualified mortgage, that QM bucket. Now there are some people that are not eligible for those type of loans, whether they're self-employed and maybe they have a ton of write-offs, so they try to show that on their tax returns, lower their tax liability, and they can't show enough income to qualify for traditional loans. Well, there are programs out there, or at least as of 2 weeks ago, there was programs out there where they could still get financing. What we saw, obviously 2 weeks ago, whenever we saw that quick spike in rates was a liquidity issue. So a lot of times those investors, they're using a warehouse line of credit to fund these loans. Well, whenever those lines got called due, right, because for whatever reason the investor, they wanted obviously they wanted that capital back. They didn't want it hanging out there in a line waiting for these loans to fund. Well, now you have a funding issue, right? So you have the potential of there being loans hanging out there that you don't have money for to fund. So a lot of those non-QM companies that we've seen out there, I've already heard of within the industry of layoffs for some of those guys, which is tough for tough for the market. But the biggest thing is funding, right? If you're halfway through the process of getting closed, let's say you started a month ago or 2 weeks ago, you may not be closing, right? So just making sure obviously that you guys are having those conversations if they're working with somebody that you're not familiar with. Anybody else that's watching, make sure, again, communicating with the buyers to make sure that, hey, there's not going to be any furloughs in employment, right? Because that can have a huge impact on your ability to close on a loan, and those kind of things, because that's where we've seen the biggest. Thankfully this week the federal government stepped in and is injecting a ton of money. We saw that with the federal funds rate that dropped by a full %, and most people were thinking that, hey, we're getting 1% mortgages, and that wasn't the case, right?
That sucks.
I know, but that's from the economy, from a bigger perspective here in the States. I mean, the banking system is a huge part to that. So that's where we saw that obviously the Fed kind of come in this past week and inject trillions of dollars, right, which is crazy to think about.
Mm-hmm.
But inject that money into the banking system, because obviously the last thing we need from anybody's perspective, whether you're buying, selling, investing, whatever, the last thing that we need is our banking system to fail, right? Mm-hmm. One of the things that we're doing, and we've kind of rolled out just from a closing perspective. So Guaranteed Rate has really pioneered this entire digital process, right? So similar to you guys in doing your videos, we've been doing this for years, where we have a hybrid closing for like our traditional purchases, and then of course just recently with everything that's happening, we've rolled out a full e-closing for refinances. So the way that the hybrid closing works is, you'd go to get approved, go through that entire process, go to a title company, and then you have a nice little stack of documents to sign through. Yeah. Well, that's, thankfully enough, from our perspective, we've wanted to kind of change that for a long time. And of course there was legislation and stuff like that hinder some of that, but we finally got, majority of that got pushed through. And now, I mean, we've been seeing for the last, probably for the last year with our flash close, that, 40, 50 pages that you sign at the title company, that has almost been cut in half. So a lot of those documents, the morning of closing, we'll have our customers e-sign. So they'll do just an electronic signature the morning of, and then they'll go to the title company, sign the other, 20 pages, 25 pages, and then they're done from a signing perspective. So it's no longer an hour and a half at closing. We're talking, 30 minutes. So that's really streamlined the process. and a lot of the times when when you're at a closing, we always sit there and obviously we're always at our closings with our buyers, and we're always like, man, did they just sign that document? Right? We always have those conversations of, man, that looks like it's the same stuff over and over again.
Yeah.
Well, now they're signing all the all those kind of what we consider junk documents. They sign them electronically. They don't have to worry about signing those at the title company. So it's really helped expedite that process.
That is
and then for our refinance customers, we rolled out last week a full-blown e-closing. So everything from start to finish, they'll, much like this, right, they're going to do some kind of a Zoom call or FaceTime or what have you with a notary. They'll provide their information to validate who they are and their identity, and they're signing everything electronically. So they don't even have to go to the title company. They don't have to worry about getting out there and potentially catching anything or whatever. So
what should what advice would you give our subscribers, our buyers right now that are looking to get into the market? What should they be doing right now in this certain kind of uncertainty time, right? You got a lot more time on your hands, yet you can't go do the things that you want to be doing. Can't fly in or go look at property right now. What should our clients be doing?
Yeah, I mean,
what are the top three?
The best thing is really prepare, right? Now with I think a lot of the tools, most people know where their credit's at, right? But it's probably less than 50%, right? There's less than 50% of people actually know what their credit scores are. So that's really step number one, right? When we talk about the process, I mean, there's really four main things that banks and lenders are looking at, and it's your income, your debts, your employment, and income, right? I mean, those are those kind of and assets. I'm sorry, and assets. So those are really those four main components. So even though you can't fly out to look at properties, make sure you're having a conversation. There's nothing wrong with even 3 months out applying, talking to somebody that's trusted, that's local, that knows the market.
How long can you lock in a rate?
I was going to ask that question.
So you have to have a contract, right? So you have to have a property identified to be able to do a rate lock. So there are some TBD options that are out there. But again, given the environment that we're in, the consensus is that rates are going to be relatively low this year, right? So unless there's something that comes out that we see that rates are going to spike and they're going to stay up, it's again, we're having those conversations, and there's really nothing wrong at this point with if you don't have a contract, if you don't have anything to buy, then we're kind of watching just like everyone else, right? But typically, I mean, you can do for new construction, we can do a 12-month rate lock. So if you're building a home and it's not going to be ready for 9-10 months, which is the typical build times in some cases, you can basically lock for that full term. Again, given the market that we're in right now, I don't think there's any reason to do that. I mean, most of what we're seeing right now is 30-day locks. New construction, we typically lock those maybe 2 months out from when they're ready to be done. So then you can do a 60-day lock, which is pretty typical. But yeah, I don't think there's any reason to jump and go lock in an interest rate, especially if you don't have a home identifier that you're going to be buying. Because again, it's most likely at this point it most likely that rate lock's going to expire at some point, right? Because if you can't do anything for 2 months, or we can't show homes or doing like that for the next 30, 60 days, at some point that rate lock's going to expire. So
Chris, if you lock in a rate and it goes down more, can you relock a rate?
Yeah, absolutely. Yeah, we have a great renegotiation policy where we can do what was back in the day when I started, 18 years ago, we used to call it a float down, and now it's just a one-time free rate negotiation, so we can renegotiate the interest rate. Absolutely.
Melissa, what are you telling some of our clients? What are maybe the top 3 things that they could be doing to get ready for the anticipated rush that we are expecting that we're going to have once the light switch is back on and we get over this coronavirus?
Well, the first thing the first step in every purchase is lending, right? So exactly what Chris Madrid has just talked about. One of the things that you asked earlier about agents is also just to reevaluate your position. Obviously, you're doing that anyway, but we're seeing some people who qualified for large amounts of money or X amount of money and aren't canceling. rather they're just, I don't know if Chris is seeing this too, but they're leaning into lower priced homes so that they don't have that huge debt and that insecurity. So number one, look at, get your stuff together, take a look at your budgets and make sure you're keeping yourself in line so that when it comes time to qualify, if you haven't yet, that you're going to be okay doing that. Secondly, with all of our clients, let's get you, we can't take you physically out, but let's get you set up on a drip. Let's get you looking at, we'll send listings to you, what's coming on market. Thirdly, honestly, take care of each other and stay healthy and keep the faith. We're going to get through this, and
It's temporary.
Right.
Yeah, it's temporary. So what, Melissa, those are good advice. What I would say and add to that is, and if you look at any of our videos, the first step would be hit that dream home form. I know a lot of people, it's we have paralysis by analysis, right? And there's a lot of tools online that you can look at, but you don't really know what you don't know yet about the neighborhood, especially if you're out of state. So I would fill out our dream home form as quickly as possible, even if you're a year and a half, 2 years out, or you're coming out as soon as the handcuffs are off. Fill that out as soon as possible. Let's set up a Zoom call, which is just like this, with Patrice and I, perhaps Melissa, maybe Chris as well. It all depends on the situation. Let's identify those areas. What's important to you in your dream home. Identify those areas that we feel that are going to be point you in that right direction. I'm sure we have videos on it, so we can tell you, okay, watch this video, kind of get you an idea, and then like Melissa said, we'll set you up on a custom alert, so you're not getting properties that that don't match your criteria.
Absolutely.
And like I said, we are seeing some people scale down a little bit. If you qualified for 800,000, maybe you're looking in that $500,000-$600,000 range because you don't want to extend yourself, and maybe that's a good thing. That is something that we should always be practicing, right? That's good practice. No one wants to be house poor, and maybe this little setback, if there's any good that comes out of it, maybe it is that we aren't overextending ourselves. But the first step would be hit that dream home form, get in our radar, because right now we don't know who you are or anything like that. Get in our system. Like I said, Patrice and I, if you've seen any of our other videos, we're not scary, right? We don't talk about we do this stuff because we care about helping people relocate here, because there's a lot of landmines that you have to navigate through moving to a new space. We did it, and to be honest with you, we wish we would have done things a little differently. And because of that, that's why we set up that dream home form in this channel, to kind of help those people navigate through this tough situation. So Patrice referenced it before, the market's always changing. This is a unique time in our market, right? And so we are going to do this on a weekly basis, every Wednesday at 2:30. We may have another special guest or two on there as well, just to kind of answer questions and keep an eye on the market. We'll put Chris's contact information down in the comments below, so you can get a hold of Chris. Like I said, whether you do business with Patrice and I or not, we'd obviously love to, but earn it. But Chris is a great resource for all things Texas lending and nationally for that matter.
Absolutely.
And then Melissa, like I said, is the backbone team mom of the Andy Daniel Group. So I'm excited to always have her on board. Do we have any other questions?
Let's see.
Looks like,
it says, can you get FHA or VA loan with no current job there? If your employment is out of the state of Texas, United Veterans says you have to have a job there to buy there.
Chris?
Right, that's correct. So for any type of primary residence, right? So if you're looking to purchase a home as a primary residence, which for FHA, for VA, for USDA, it has to be, in order to be eligible for that type of financing, it has to be your main or your primary residence. So if you don't work and live where you're looking to buy, then unfortunately, yes, you won't be eligible. There are options for like conventional financing where you could purchase, potentially, let's say that you live in another state, you have family in Texas, you want to be able to have, something that you can call home and come to. There's a second home option, right? So that would fall under the second home option. You need at least 10% down for something like that. But that could be something where you look at a conventional loan, and obviously the criteria that goes along with it, right? The down payment's one, but there's the other, minimum credit scores and cash to close. But that's true and accurate. So to the question, that is 100% correct. If you're not going to live in it primarily, and you don't work in the area, you can't get approved for financing. Now, if your job can indicate that, hey, you're a remote employee and you can basically live anywhere to perform your job, then that's something totally separate, right? If you're going to live in the home primarily and you travel, your company flies you out, that's a totally separate conversation. But it's got to be your primary home if you're looking to get an FHA, VA, or USDA loan. That's 100%.
Let me ask you this, Chris. So let's say that we have an out-of-state client and they are employed now. Let's say that they're just, because of affordability or they just love Texas. They want to be here. They love Patrice and I so much that they be our neighbors. Let's say that that's the case, right? And so they're coming out here on blind faith, and they're going to get a job because they're going to take advantage of the hot market out here. What does that look like from a lending standpoint? Let's say that they were, I don't know, auto mechanic or something like that in California, and they are obviously they stop employment there. They want to move out here, and they know that they can get a job out here at any of the mechanic shops. What does that look like as far as a lending standpoint?
Yeah, great question. So for conventional financing, as long as we have a fully executed offer letter or contract of employment, and there's no to-dos that are left on the offer letter of the contract, they can basically, we can close with that fully executed offer letter for conventional financing, right? And that's conventional financing up to the limit now here in the area is $510,400, right? So if you're financing up to $510,400 and you have a fully executed offer letter, and your company says that, hey, you're starting on X date, and we're 30 to 60 days in front of that, you could still potentially close. So for conventional, that's not the same issue as it would be for FHA, VA, and USDA, right? So going back to those options, very flexible when it comes to credit scores and stuff like that. But related to income and employment, they want you to have at least 30 days worth of pay stubs. So if you have somebody that's relocating from out of state and they know that they can secure employment, unfortunately, they're going to have to hang out somewhere for at least 30 to 45 days, get their 30 days worth of pay stubs, and then we can look to get them closed. So
what we are suggesting, and thanks, Chris, for kind of going into that and explaining that a little bit. What we are advising, and that's why we want to get that dream home form and get on our radar, so we could kind of walk through these scenarios with you, is we're putting people up in short-term housing, those Airbnbs, there's apartments or whatnot, whatever the case may be, and then let's get you that job. Let's get that offer out, and then it gives us just more time, more boots on the ground to kind of explore the area together and really find your dream home. So that actually works out pretty well. So don't be afraid to come out here without that job. The employment out here is plentiful. So
absolutely.
So that's great. Do we have any other questions or anything? You're not seeing? All right. Well, like I said, if you have any questions in the meantime, info@andyandpatrice.com, and we can set it up for next week. Or answer your questions right there on the spot. And then we'll have everybody's contact information below in the comments. And until next time, I'm Andy.
And I'm Patrice.
Take care, guys. Thank you,
Bye,
guys.
guys.
Stay safe.
Yeah,
Absolutely.
you too.
Wash your hands.
How do I end this thing? Here we go. All right, guys. Peace out.
Okay.